coming in on M&M, but we're getting you, the management, on board to get a sense of what's going to be the roadmap ahead. We're joined by Nalinikant Gollagunta, who's the CEO of Automotive Division Mahindra and Mahindra, now joining us. Hi, good morning, sir. Thank you so much for joining us today. So firstly, three-wheeler volumes have grown 53% on a year-on-year basis in July. How much of this is the EV mix, and is this pace really sustainable going ahead?
Yeah, the three-wheeler business is part of our last mile mobility. I won't be able to comment a lot, but if you look at the L5 category overall, the EV penetration on that has crossed 40% now. In Q1, it was 40.2%. So very strong penetration numbers on EV coming from there, and that's driving bulk of the LMM growth.
Right. Now, what we can see is exports have jumped about 47% YOY in July. Which geographies do you think are driving this? And is the order book healthy heading into Q2?
Yeah, exports have been a big highlight for us, not just in July, but overall YTD year to date. If you see, we have 60% growth coming from it as well. Multiple factors. The portfolio is quite strong, both in South Africa and Australia. And recently, we announced a big CV deal in Indonesia as well. So that's driven some part of the growth as well. But all in all, I think a very robust set of numbers coming from exports for us, both driven by products like 3XO selling very well in South Africa and then the new Indonesia order.
Right. Mr. Gollagunta, there was a slight dip in the SUV numbers compared to June. Is this seasonal, or are you seeing any demand softness?
Yeah, so it's a marginal dip you would have seen. We took a plant shutdown in the early part of July. We talked about it as well. So we took a 4-day shutdown. This was in preparation for our capacity enhancements we're doing by end of Q2 and in time for festive as well. So that drove the numbers a little bit down. But beyond that, you should see the numbers coming back up in August.
Right, so the management has guided Q2 margins to improve via price hikes and commodity stabilization, with a 2.7% SUV and 2% CV hike taken mid-July. Now, how confident are you in margin recovery?
Yeah, so most of these commodity prices came into effect in Q1 itself, and you've seen the Q1 performance which Rajesh and Anish talked about. So we are optimistic that we'll be able to hold on to those margin profiles in Q2 as well. Commodities overall is clearly an area of focus for us. Like you rightly said, we took 3 price hikes. In Jan, we took a 1% price hike. In April, we took a 1.3% price hike, and then a 2.7% price hike in July. So we'll continue to watch it very closely, but at this point in time, from what we have seen, we are hopeful that we'll maintain or do slightly better on the margin profile in Q2.
Right. Also, the e-SUVs are now 12% of the volumes with positive EBITDA ex PLI. And what's really the FY27 e-SUV volume target for you then?
Yeah, so when we exited last year, F26, we exited at a capacity of 5,000, and we were largely doing about 80% utilization of that. Then we had launched a new product, XCV9S, which has done very well for us. And we took the operational capacity to 8,000. Currently, we're tracking anywhere around 7,000, 7,500 in terms of utilization of that 8,000 capacity. And 50%, more than 50% of that is coming from the XCV9S. So my estimate is we will stay in that 7,500 range between the 3 products. The good news is, even with the 9S coming in, we continue to see robust volume in BE6 and XCV9E as well. So between the 3 products, we are estimating around 7,000, 7,500 going forward.
Right now, with capacity scaling to 92,000 per month by FY28 and Nagpur Greenfield adding about 40,000 more by FY31, how are you thinking about utilization levels and return on capital?
Both the portfolios, if you look at ICE and EV, we have strong products being lined up for launches over the next 3 to 5 years. We have the Ingo platform, obviously, on which we have 3 top hats already in play. We'll have 1 more coming in. Then we have the new IQ platform, which we launched as well in August last year. That comes in the sub-4 and the 4.3 meter range. And so if you take both these platforms put together, we have a very robust pipeline of products coming in, and that will come both in Chakan couple of the products will start in a brownfield in Chakan in about 2 to 3 quarters, probably about 4 quarters. And then Nagpur will have the rest of the new IQ portfolio coming in as well. So I think we have a strong pipeline which should fill the capacity that we are creating at this point in time.
Right. Also, Mahindra is known to dominate the premium side of the EV race. Do you plan to make launches in the sub 15 lakh price bracket, and what would be your strategy?
Yeah, we have a strong portfolio on that. I know that we are known very well for the premium segment and we do very well there as well. But having said that, we have compelling products in the sub 4. We have a 3-door Thar, we have Bolero Neo, we have 3XO, which has been doing very well as well. In fact, 3XO is the fastest brand for us in terms of volumes hitting 100,000. So strong portfolio within the sub 4. We are known for the premium products, but the portfolio is very strong even in the sub 4 segment for us.
Right, Mr. Gollagunta, also finally now, what could be the timeline for EV margins to get at parity with ICE margins?
We don't have guidance in terms of forward-looking profit. But overall, from what we have seen, very robust performance on the EV portfolio, like you said, and still very much in category creation mode. As we get new products in, we should be able to deliver very good numbers more from a volume perspective. The INGLO platform I talked about earlier is the one which underpins all our EV products at this point in time until new IQ comes in with EV. So as we put on new products on the same platform, you're amortizing the development costs and everything over a larger volume. So we see that it should be a strong performance overall, but currently the focus is to create category, create volumes across the different brands we are introducing at this point in time.
Right, and that note, Mr. Gollagunta, thank you so much for taking the time out and joining us on ET Now. We'll let you go on that note.